class. This is your Fundamentals of Accountancy, Business and Management 1 for your Module 4 or Week 4 topic. So at the end of this lesson, you'll be able to discuss the 5 major accounts and you'll be able to prepare a chart of accounts. So there are 5 types of major accounts. First, we have the assets, liabilities, owner's equity, income or revenue, and expenses. So assets, these are all the economic resources owned by the company and are expected for future gains. So they include property and rights of value owned by the company. So it refers to like cash, inventory, accounts receivable, buildings, land, or equipment. So it can be categorized to tangible and intangible. So tangible assets are the physical entities that the business owns, such as land, buildings, vehicles, equipment, and inventory, while intangible assets are the things that represent money or value, such as accounts receivables, patents, contracts, and certificates of deposits, or what we call CDs. So there are 2 types of assets. First, we have current assets. So cash and other assets that are expected to be converted to cash within a year. So examples, cash, cash equivalents, marketable securities. So don't worry, we will discuss it along the slides. Second is the non-current assets. So non-current assets are assets that are not likely to turn to unrestricted cash within 1 year. So it is also referred as long-term assets. So for liabilities, these include the debts or obligations payable to creditors and other outsiders to which your company owes money. So liabilities are one of the 3 ways in which a business can acquire funding. So same with the assets, it has 2 classification: current liabilities and non-current liabilities. Also, we have owner's equity, income or revenue, and expenses. So again, assets are those cash and assets that are expected to be converted to cash within a year. So it can be current asset and non-current assets. So these are just some of the examples of current assets. So we have cash. So when you say cash, it includes coins, currencies, checks, bank deposits, and other cash items readily available for use in the operations of the business. And when you say cash equivalents, so these are short-term investments that are readily convertible to known amounts of cash, which are subject to an insignificant risk to changes in value. Also, marketable securities, so these are stocks and bonds purchased by the enterprise and are to be held for only a short span of time or duration. So they are usually purchased when a business has excess cash. And for non-current assets, so asset that is not likely to turn to unrestricted cash within 1 year. So again, it is also referred as long-term assets. So examples, long-term investments. So these are assets held by an enterprise for the accretion of wealth through capital distribution, such as interest, royalties, dividends, and rentals, for capital appreciation, or for other benefits to the investing enterprise, such as those obtained through trading relationships. Another is we have the PPE, or the property, plant, and equipment. So these are tangible assets that are held by an enterprise for use in the production or supply of goods or services, or for administrative purposes. So um, specific examples here are first land. So when you say land, it is a piece of land or real estate. You also have building. So we know that building is a structure used to accommodate the office, store, or factory. Equipment. So it includes typewriter, air conditioner, calculator, filing cabinet, computer, what else? Electric fan, trucks, and cars used by the business in its office or factory. So specific accounts titles may be used, such as office equipment, store equipment, delivery equipment, transportation equipment, and machinery equipment. So you can not record in the book like electric fan, but instead you can use it as furniture and fixtures or office equipment. So furnitures and fixtures, it includes tables, chairs, carpets, curtains, lamp, and lighting fixtures. So against what I have said, in recording, in journalizing transaction, you use it as office furnitures and fixtures, not cabinet, not tables, not carpets, or store furnitures and fixtures. So for liabilities, so again, it could be current liability or non-current liabilities. Some of the examples of current liabilities here we have accounts payable. So again, liabilities, this include the debts or obligations payable to creditors and other outsiders to which your company owes money. So liabilities are one of the three, again, ways in which a business can acquire funding. So two types of liabilities, current and non-current. And when you say current liabilities, amounts due to be paid to creditors within 12 months or less than a year. So some of examples here, we have accounts payable. So it includes debts arising from the purchase of an asset or the acquisition of services on account. Okay. Next, we have here the notes payable. So notes payable includes debts arising from the purchase of an asset or the acquisition of services on account, evidenced by a promissory note. So that's what you call notes payable. For loans payable, so this is a liability to pay the bank or other financing institution arising from funds borrowed by the business from institutions payable within 12 months or less or shorter. Another we have here, utilities payable. So this is an obligation to pay utility companies for services received from them. So examples of this are telephone services, electricity, and water services. Another we have here, unearned revenue. So when you say unearned revenues, these represent obligations of the business arising from advance payments received before goods or services are provided to the customer. So this will be settled when certain goods or services are delivered or rendered. So this is a what? Advance payments received. We also have accrued liabilities, so it includes amounts owed to others for expenses already incurred but are not yet paid. So examples are salaries payable, utilities payable, taxes payable, and interest payable. For non-current liabilities, so opposite for current, of course, so these are long-term liabilities or obligations which are payable for a period longer than 1 year. So some of the examples here, we have here mortgage payable. This is a long-term debt of the business with security or collateral in the form of real properties. It could be land, your lot, or your house. Then bonds payable. This is a certificate of indebtedness no, under the seal of a corporation. So it specifies the terms of repayment and the rate of interest to be charged. The third one, we have owner's equity. So this defines how much your business is currently worth. So how much is the worth of your business? So owner's equity or capital, this is an account bearing the name of the owner representing the original and additional investment of the owner of the business. So it is increased by the amount of net income earned during the year and decreased by the cash or other assets withdrawn by the owner as well as the net loss incurred during the year. So, drawing represents the withdrawals made by the owner of the business in cash or other assets. So, there are two types of equity. We have here contribution or investments and drawing or withdrawal. So, for contribution, it may be the startup capital or a later infusion of cash. Drawing or withdrawal, so if a business is profitable, the owners often want some of the profit returned to them. For the income or revenue, this is the money that the business earns from selling a product or a service or from interest and dividends on marketable securities. So other names for this, you have gross income, the turnover, and the top line. So net income is computed as revenue less expenses. Okay? So, other names for net income, you have profit, net profit, and the bottom line. Okay, income accounts are classified as temporary or nominal accounts. So, this is because their balance is reset to zero at the beginning of each new accounting period. We have here the last one, expenses. So some of the examples of expenses. First, we have salaries or wages expenses. So these expenses include all payments made to employees or workers for rendering services at the company. So usually salaries are for um, monthly salary. Wages is for based on our hourly basis or daily basis. Utility expense, this is an expense related to the use of electricity, fuel, water, and telecommunication facilities like your internet. This one, supplies expense, of course, this covers office supplies used by a business in the conduct of its daily operations. Insurance expense, this is the expired portion. So when you get insurance for your health insurance, or for your family, so, and for your business, this is the expired portion of premiums paid on insurance coverage, such as premium paid for health, or life insurance, motor vehicles, or others. This depreciation expense, this is the annual portion of the cost of the tangible assets such as buildings, machineries, equipment charged as expense for the year. Okay, and for the uncollectible accounts expense, or what we call the doubtful accounts expense, or bad debts expense, this means that the amounts of receivable charge expense for the period because they are estimated to be doubtful of collection. Then we have here interest expense. So this is the amount of money charged to the borrower for the use of borrowed funds. When you say chart of accounts, so this is the list of all your company's accounts used, and this is listed together in one place. So just like this one. So the main account types include assets, the liabilities here, and the owner's equity. This one, income and expenses. So this is a sample chart of account list. So this is the chart of accounts for a fictional business. So we have here Ewing Cleaning Supply Company. So companies in different lines of business will have different looking charts of accounts. So the charts of accounts should give anyone who is looking at it a rough idea of the nature of your business by listing all of the accounts involved in your company's day-to-day operations, just like this one. So if your business involves cash, accounts receivable, cleaning supplies, prepaid expense, and you also have account number for it. Account code 101 for cash, 112 for accounts receivable, and for liabilities, you start with 2. 201, 220. For owner's equity, you start with 3. For income, you start with 3. Also 320, 332, and for the expenses, you can have here 7, 6. Okay, so this chart of accounts is designated to be a map of your business and its various financial parts. So this is a well-designed chart of accounts, should separate out all the company's most important accounts and make it easy for you to figure out which transactions get recorded in which account. Okay, so that would be all for this video discussion. Thank you so much.